Hey everyone, welcome to Doc W Trades. And it is February 12th, 2026. We are approaching the closing bell, just recording here as we head into the final half hour of trading. And we are taking a look here at the S&P 500 futures contract, what the market has done so far today. This blue line is where we closed the trading session yesterday. So this marks what the S&P 500 has done since the close of the previous trading session. And this yellow line marks the close of the trading session for last Friday. So the yellow line marks what we have done. It is the break-even point for the week, and the blue line is the break-even point for the day. And as you can see, the way the S&P that we have introduced zero DTE options on many of the Mag 7 stocks. When you zoom in here to look at what the S&P futures contracts do overnight, it is very evident that it doesn't do much anymore. I remember trading back in specifically about 10 years ago and a little bit before 10 years ago, that period after the financial crisis up until the beginning of the first Trump presidency. During that period, you had so many times where you would get huge volume and huge moves in the futures contracts during the overnight hours. But consistently, over and over and over again, day after day, you look at the S&P 500 overnight, and there's not much action. I mean, so the big moves come after the cash open now, and you don't get big moves at all during the overnight hours. And you take a look at the NASDAQ and look at this 1 minute chart here, and you can see the big move after the opening bell at 9:30, and 9:30 opening bell goes off. Bam! You get huge moves. You get very small moves overnight, but then you get huge moves right after the 9:30 cash open. And we can zoom in here overnight and take a look at this overnight action on the NASDAQ, just to emphasize that we're not getting the overnight moves like we used to get in the olden days in these futures markets. And you can see here, this is where we started the overnight trading session, and you get some moves. I mean, 50, 60, 70, 80, 100 handles, but nothing extreme like we're seeing on a day-to-day basis. As you take a look here at the NASDAQ, we're down 1.88% on the day, and we're down 476 handles. So you see this overnight action, and then zoom out here. You take a look at just the cash session, regular trading hour session, and we zoom in here and you get big moves. I mean, it's a lot bigger. The pure simple reason is now that we've introduced weekly options and now daily options into the mags, these options that expire almost every day in they trade in the SPX, the SPY, the Qs, and now they trade in the largest stocks of the S&P 500. Meta, Apple, Amazon, Nvidia, Microsoft, Tesla, Google L, and also in Broadcom. The fact that those largest stocks in the SPX and in NASDAQ 100, along with the indexes of the SPX, the SPY, the QQQs, that they all trade daily options now. All the trading action will be dictated based on what these options do. As you can see here, when we look at the SPY, we can see how there's options that expire every single trading day. And then we look at Q's, same thing, options that expire every single trading day. And now we look at the individual stocks and we can see that we now have dailies trading. And pretty soon they're going to have options expirations every single trading day in the Mag 7 stocks. They also have a release for Monday. I'm very curious to see how this has an effect on Bitcoin, as this ETF is now trading daily options, and everything that goes on during the cash session is basically dictated by the options due in that specific stock. So we can take a look at, we take a look at the charts and we take a look at the S&P 500 and we see how the S&Ps have been getting killed all day long. And then we take a look at the options on the SPY. You go down and take a look at the option statistics on the SPY. And we see how a majority of the options that are traded are puts, and a majority of the calls that are traded at the bid, means they're getting sold. So when you look at that total option statistics as a whole, when you have the calls being sold and an equal number of puts being bought and sold, that's bearish. And then we take a look at the NASDAQ chart, and we see how the NASDAQ's getting smashed to the downside. And then we look at the Qs, look at the Qs options. A majority of the options that are traded are puts, and a majority of the puts that are traded today are being sold, which is bullish. That's bullish. But a majority of the calls are being sold, which is bearish. So when you combine that with lots of puts being traded and a sizable amount of puts being bought, collectively as a whole, that is bearish. And one thing I didn't mention, we can take a look at the Qs motion. We can also take a look at the SPY when I'm done looking at the Q options, is that they've issued these daily options on the SPY, the Qs, the SPX, and the Mag 7. The key thing is when you open up these options chains and you look at open interest and volume. You can see how a majority of the volume is all traded with 1, 2, 3, 4 days left to expiration. Now, for those that don't know what open interest is, basically that is, and that's this column here, that is the number of options contracts that are outstanding that people own. Okay. That people have either bought to open or sold to open. So they're outstanding open option contracts that people own somewhere out in the world. That is what open interest is. Volume is the amount of option contracts traded today. And as you see here, we look at the Qs, that's the NASDAQ 100, and we look at all these options. Look at all this volume that's taken place today. 30,000, 28,000, 57,000, 54,000, 59,000 contracts, 41,000 contracts, 42,000 contracts. You get the point. And you go out to next week and we look and we see same thing. Lots of options contracts traded. Okay, 15,000, 5,000, 6,000, 4,000, 6,000, 12,000, 3,000, 4,000. And as you can see, as we go further out, now we've got 6 days, we have 1,500, 3,100 contracts traded. We have, 1,500, almost 3,000 contracts. But as we're going further out in time in the queues, we have less and less volume. So all the volume is being concentrated on the 0 DTE options, 0 or 1 day to go till expiration. Here we go at 7 days. You really see the volume drop off. You get 3,000, 1,500, 2,000 contracts, 1,000. But as you can see, it's getting less and less and less. And we go out to 8 days to expiration. It's getting, and this is a main expiration. This is a key expiration. It's a monthly regular expiration, and that's why the volume is a little higher here. But still, even with this major expiration, it still doesn't pack enough punch to compete with the volume with 1 day to expiration. See? And look at the 0 DTE. Look, we're getting even more. I mean, this is huge. Hundreds of thousands of option contracts traded. So let's take a look at the SPA to get this point across. Okay. 200, 300, 400,000 contracts traded. Look at this. It's huge with 0 DTEs left. That's what that 0 is. These options expire today. We go out 1 day to expiration. And same thing, huge volumes, but not as big as the day before that the options that expire today. And we go out, 5 days left to expiration, still decent volume, but not as big. So the key thing is that all this volume that is taking place in the SPY today, in these 0 and 1 day to expiration options, and also in the Qs, let's see here, but also in now individual stocks. We take a look at Apple with only 1 day to expiration, huge volume. See, huge volume with these options that expire in 1 day. Take a look at NVIDIA, same thing. Look, huge volume with only 1 day to expiration. Okay, huge. Take a look at Tesla. One more. All this volume that's taking place with 0, 1 day to expiration, that is what is moving the market up and down. So when you're getting, you see 1 day to expiration in Tesla, huge volume. So with all that volume taking place in these individual stocks and in the indexes, you're getting these huge moves and in the stocks and in the indexes. And these options don't trade overnight. So you're not getting the huge moves overnight. In the early market. But for the most part, look, the options aren't trading overnight, and you don't get the big moves in the futures like you used to in the olden days. Because as they're trading these 0 DTE and 1 DTE options in the index ETFs and in the individual stocks, the market makers hedge those options by buying and selling futures contracts. So there's this dynamic between the options in the SPX. This is having a difficult time loading. And this is the mother of all products, the S&P 500 index options, as only options trade in the S&P 500 index. But all the volume is pushed up to 1 day to expiration and 0 days to expiration in the SPX, just like in the SPY and in the Qs. And so people are trading these options, trading firms are trading these options, and the market makers are then hedging after trading these options, and also in the SPY and then the Qs. So you have trades in these options that are taking place. And to hedge these options, the market makers are buying and selling futures contracts. And that is how you're getting these big moves during the day. And a lot of times you'll get an initial pop and then it fades very quickly. So that is what's going on. It's the way the market is now. And I think that's just how the market evolves. So even though we have futures markets in the indexes that are open, it's just like the futures indexes are only open during the regular trading hours. So that is how we have to go about the market. And the thing is that usually in the olden days, you would look at the overnight session and you would get a feel of what the day is going to be like. You look and see that, okay, the market's kind of migrating higher and it's in some type of uptrend. We're going to continue to be in a bullish trading day for the rest of the day. But no, market opens and then bam, it gets smashed because people come in and start buying put options in the SPY and then the SPX and the Qs. And then the market makers hedge and you get this big down move. And that's the dynamic that's taking place in the markets, is that in the olden days, you could look at the overnight futures action as as a indicator of what type of day you're going to have. But if you have the overnight futures action that show, you know, it's kind of bullish. It's trending in a bullish direction. But you get the 930 cash open, and then you look at the options statistics, and these option statistics are, very bearish. And I don't like to look at the ES options. I like to look at the SPX and the SPY options. You look at those options, and they're showing that the action is bearish. Then that means even though the chart is bullish, the options are going to dictate what the day is going to be. And what's really frustrating is you can get very bullish options activity for the first minute or 2 minutes or 3 minutes, and then it reverses and it becomes very bearish. So it's very, very difficult to predict what the markets are going to do. But the options do give you confirmation of the type of market action that we have and how to expect and kind of gives you a idea of what to expect going forward. And we have this many puts being traded. There's more puts than calls being traded. There's equal number of puts being bought and sold, and a majority of the calls are being sold. That's very bearish. So, you know, don't if you're a bull on a day like today, this is when you back off and you don't try to force anything. So let's take a look at a few stocks. All that being said, it is earnings season, and one of the main stocks that I am very bullish on for the foreseeable future is Micron. I talked about Micron in another video, and what makes me so bullish on Micron now, even after the everything that I said in the other video, is that when I listen to other companies' earnings calls, and when I say other companies, I mean other companies that I don't necessarily own their stock, and I don't even have any interest in buying their stock, but they all talk about the memory shortage and how it's a very big deal. And companies like Micron have to pick and choose. They're at a point now where they have to pick and choose what customers get what because the supply is so pinked. It's such a big bottleneck. And now I've heard from other companies that the memory shortage is not going away anytime soon. It's going to be around for years. And companies like Micron, as well as other companies like Western Digital, okay, SanDisk, they sell flash memory. SanDisk sells flash memory. And these are all companies that are benefiting from this memory bottleneck, and they're going to continue to profit from this memory bottleneck for a while. And I think when it comes to investing and trading, you can really go down the rabbit hole and you can overthink things. And here is a theme, a thesis that is not going anywhere. It is clear after listening to multiple conference calls and hearing multiple CEOs talk about it from various industries and various companies that there is a huge shortage in memory. The AI build out is the catalyst behind it. And this dynamic that's now in place is not going to go anywhere. It's going to continue for years and years and years. And you have stocks that are benefiting from it. At the end of the day, you have to remember, why are we doing this? Okay. I mean, you can go down the rabbit hole and, look at all your Fibonacci's and MACDs and all that stuff, I mean, but at the end of the day, we're here to make money. And you have a thesis, a theme that is not going anywhere. And you have companies that are profiting from this theme. I think you just got to hop on board and go for the ride with it and really take advantage of this and just buy these companies and hold on to them. You don't have to buy every single one, but pick one of them and just buy them and hold on to it. Don't overthink it. Another company that is also, I think, benefiting from my bottleneck that I think can go a lot higher is Bloom Energy. And they supply hydrogen fuel cells that can have AI data centers up and running, fully functional in less than 90 days. And they talk about on the conference call how, yes, they can aim to have data centers up and running without the need of turbines or so forth up and running, fully functional in less than 90 days. And they discuss stories where they've had data centers up and running, not 90 days, but they've been able to do it in 56 days. And what's really interesting is now you have another thesis that I think could propel the bullish narrative for Bloom Energy even more. And that is that now, specifically in the blue states, like West Virginia, New York, and so forth, there is lots of pushback from residents in these various areas of there's more pushback and concern from residents in these various areas for that they need or they want the states to stop producing data centers because it's causing their electricity bills to go through the roof. And the conundrum is that, you know, the Trump administration is full on board in supporting this AI build out. It's an arms race. All these companies are all in on building out more data centers and AI factories. And they're going to invest more. They all said on the conference calls that they're raising their capex expenses. The Trump administration supports it, but then you have these local movements from residents as well as governments that are saying no, 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 no. We're going to have to, slow down the build out of data centers, and even we're going to start pushing to stop making data centers completely. And at the end of the day, with this dynamic taking place, at the end of the day, a company like Bloom Energy provides an answer to that conundrum. So I think, and this is my thesis, I think at a certain point, these hyperscalers are going to realize that they're going to have to invest. They're not going to have a choice. They're going to have to invest in companies like Bloom Energy that provide the energy at a cheap price without affecting the grids, because we don't have enough infrastructure at this point to provide efficient energy to these data centers. And because Bloom Energy creates these hydrogen fuel cells that create this energy without the need to plug into a grid, it is the answer at a reasonable cost for these data centers to use to continue the massive AI build-out. So at a certain point in the future, my thesis is that you're going to get more and more and more in the future spending on a company like Bloom Energy in the future. Even though the market is very, very shaky right now, and this does not surprise me at all, this very shaky, volatile market, because as you can see here, Bitcoin has been getting slammed. If you're a stock trader, don't focus on stuff like gold and silver and stuff. It's all focused on gold and silver. But if you're a long-term investor and you have stocks, the key indicator that you should be looking at is Bitcoin, because Bitcoin has the highest correlation to total global liquidity. And the best proxy to measure global liquidity is to follow Bitcoin. And the way we have had this big down move, which will continue to have lower highs and lower lows. We get a little bounce here, but we take those lows out and we continue to go down. We're just, even after we have a bounce at the beginning of February, we're still, trending down, and we may easily take out this low right around the 60,000 level. The fact that Bitcoin is selling off the way it is shows that global liquidity is falling and money is coming out of the system for whatever reason. Until Bitcoin can show that it's bottomed, I think that we're going to continue to see lots of volatility in the stock market going forward. So it is past 4 o'clock. We are done for the trading day. The NASDAQ finishes down over 500 points. The S&P finishes down over 100 points. The SPY down over 10 points. The Q's down over 12 points. And you just really see that this market is just on shaky footing going forward. And especially when you look at the S&P 500 chart and you just see it on a big picture, we're just going sideways. We've basically just been going sideways ever since, October, beginning of October. And, we take this crosshair here, we go all the way back to before this big down day. And we go back to October 8th, October 7th, and we are right where we were on October 7th and October 8th at the beginning of October. We have done absolutely jack crap in the market. And we take a look at, it's kind of comical. Take a look at the NASDAQ chart, and you see this little cross here. We go all the way back to the beginning of October, and October 3rd, October, here we have October 1st, October 2nd. We go back to September 30th, and we are right where we started, just a little bit below where we were all the way back to the beginning of October. So I think that this choppy market action continues until Bitcoin forms a bottom. And I also want to see the market. I also want to see money flow into the big cap tech stocks as well. And that's not happening. You take a look at the, big cap tech stocks, and it's very clear here that money has been flowing out of these stocks. And when you look at the NASDAQ, we got a nice up day earlier this week, and then we got a follow through day. We'll zoom in here and take a look. We got a nice up day on February 6th, and we got another update after that, very, very positive, very constructive, but it is not stuck, and we've just rolled over. We had a big down day today, so this confirms that these follow through days and this up day here, this reversal day, they're negated. That tape action is negated if we take out these lows, and the fact that we had this big down day today confirms that this market action is just not very strong. It's very bearish, and we should see more bearish action until you get positive tape action, specifically in tech stocks, that confirm we're done going down. But at this point, we're not seeing that. So that's it for today. I'll talk to you all later. Don't forget to like and subscribe to my channel. I'm trying to get something going here. YouTube is starting to like my videos and get them out there. So, hey, if this keeps going well, I'll keep making more and more videos and getting them out there. So thanks, everybody. Take care. Like and subscribe. Bye-bye.